Good morning, everyone. Hey, this is Rick Kaufman, your host with LMA Trading, and we are coming to you with another Tuesday. Actually, I think maybe we'll call this Turnaround Tuesday. I don't know, based on the markets, but pre-market prep. How I read my pre-market prep charts, how to handle emotions, and all those good things that basically we see on a day that may be a turnaround. Um, the markets have been up for quite a while, for several days now. We've had, last week we had a little pullback one day, but other than that, the markets have been relatively strong the last few days, and the Qs and the S&P just continue setting new highs, of which they have already done here on today's market, but they've been pulling back just a bit from their highs in pre-market. So with that being said, let's get into today's video. My name is Rick Kaufman, and I am a 60-plus-year-old trader with over 30 years of experience as far as in various ways as trading, going all the way back into the 90s when I first traded, basically picking up the phone or having a stockbroker call me at my business, and just like you see in the movies, like Boiler Room and stuff like that, where they call and sell you their next hot tip, of which I never really made any money that way. Somebody always got my money from that standpoint. But, from that point in time, my father traded, but it's always been something that's been on my radar. I went into financial services and managed my own office for a while. I was licensed to do investments, and then I went to work for Chase Bank, and so from that standpoint, kind of managing other people's money, doing other things for other people, I decided that here, with the advent of the internet, things like that, and as I had looking for ways to produce additional income, and when the pandemic hit, I was forced to do some different things, and so that's kind of why I'm here doing what I do. So some just basic housekeeping. I'm not a financial advisor. Okay. I don't give financial advice. These videos are really part of my trade journal. These videos are really part of me taking a look at the markets, how I perceive the pre-market, and how I determine what I think the market will do. And in the end, the market's going to do what the market's going to do. I trade my own money, so I lose my own money. I look at my own entries and I take my own exits, and I determine my risk and I size in accordingly. I like to look for high probability setups. I play the probabilities, and I believe that's what the market is all about. There's a lot of make and bank bros, that like to be in and out in 30 minutes of the day, make a pile of money. And I think that is very, very far and few between. I believe this is where the rubber meets the road. It is in the pre-market. The pre-market is where you determine what's going on with the markets. You don't pay attention to the news. It's all, there's some fundamentals at play. Those things, the fundamentals there is nothing in our control, I believe, as far as fundamentals. It's all about the technicals. But from that standpoint, you need to understand that stocks have risk, options have risk, and they may not be suitable for everyone. And past results are no indication of future returns. And so, the history doesn't necessarily repeat, but it does rhyme. I kind of mentioned that in yesterday's video. But as we are closing out August today, it is August 31st, the last trading day of the month of August. I don't know where this summer went, but it has flown by. Typically, based on seasonality, August is usually kind of a slow month. I believe as far as for my trading, it has been the complete opposite of that. It has not been a slow month. But, we've had some really, really good gains. August actually is one of my best months that I've had. In probably 3 or 4 months. We started the month with kind of a drawdown on the account, but the last week and a half, 2 weeks, our trading just has clicked, and we've not only recovered all those drawdowns, but we've made money. So, but again, I believe, and I credit part of that success is with my trade journal, with my trading plan, with my handling of my emotions, and handling those types of things as far as my pre-market prep and what I do with this video. So with that, let's go ahead and jump in, and let's take a quick look on my screens as far as what we are seeing in today's market. So I got my coffee here, so I'm going to take a quick sip, and we're going to go ahead and jump into what I'm looking at here on my main trade screen here as far as my 4 charts and everything. I've got the ticks up here on the left-hand side, but I watch the VIX. The ticks kind of tell me, is the market selling off, or are people buying? Kind of gives me an overall view of the markets. The VIX is kind of telling me a little bit about the fear. Some people use the UVXY and the VXX. I like, but the VIX, in the end, it kind of gives you the same thing. But I think some people say it's kind of a laggard, but lags behind. You can do some other things as far as indication to pick up fear before, but again, when fear creeps into the market, it comes in pretty quick. And so the market is really what I look at in pre-market prep is the price candles. The candles are part of price, but it's really people's emotions, how they're feeling about the markets. Are they bullish on the markets? Are they bearish on the markets? And I'm trying to determine, what are people going to do today? The markets were up, they pulled back. Now they've looks to be like they are moving back into, positive territory a little bit. And so, but it's early. It's only 7 o'clock or 7:15 in the morning here on Tuesday morning. The VIX has kind of popped from a low of 1590 up to about 16. I've got an alert set at 17. We pop above 17. I'm going to be watching to be able to make my entries to see if we can get if the fear is going to continue and keep going higher on the VIX as far as the fear index, and if we're going to get any type of pullback. So to look at buying this dip. Anyways, let's jump over here into my charts, and let's go ahead and take a look at. We'll start with the Dow. Okay, the Dow here, we are up about 20 points, 19, 18 points, something like that. We were up when I first looked at the market. So when I first got up here this morning, we were up around 70, 80 points here this morning. We are close to, 52 weeks high. We are about 2% away. Yesterday in pre-market prep, we were about 1%. So it's pulled back just a bit from that high. We've got, that high, that 35,547 is acting resistance. So we tested it here the day after we set the high. We've had a pullback, and we've kind of tested it every day for the past week. Indications are that, I don't know if we're going to break it. I would venture to say I don't think we're going to break it today. I think the emotions in the market is the market's been up quite a bit. I think we're going to continue consolidating. We need some more buyers and to come into this market and push it a little higher. I just don't think it has the momentum on the Dow to get over that resistance level yet. But we'll see. Anything can happen in this market. let's go ahead and jump into the Russell. If you've been following my videos, you've known that, I played the Russell on the downside here. We did rather well. We then noticed this double bottom here, this double bottom, which is a typical reversal pattern, and it did reverse and kind of go up from there. We had a price target, or we had a target where we were looking at this to reject, was somewhere between the 21 and the 1 ATR. It did reject a couple days and pull back, but then on last Friday was an insane day in the markets, driven by Chairman Kapow. He compelled the market, and Afghanistan, everything. So things kind of really took off here. I think Afghanistan might be on the market's mind today, with the Americans pulling out and leaving some people behind, I guess. So I don't know how that'll play out in the markets today, but I think there's some fears around that, is that we may be get drawn into some other type of conflict. Plus, with the anniversary of 9/11 just around the corner, a lot of people's eyes are looking at this world-based economy and what's going on in the world, and what our United States mission might be, and how that's going to play out. But we got a little bit of a pullback yesterday. It looks to be pulling back. It's up 0.5% here this morning, but or actually a 0.5 point. And I think the Russell's going to, it's running into exhaustion based on our indicators. So it's running into the high, and so we'll be looking for this to begin to probably reverse and come back down to the mean. And then, but if we break below the 21, we'll be looking for a hedge on this, or a short play to go back down, because the trend on the Russell is bearish. So it is a downtrend, indicated by the ADX, the red box up here on the left. And also, but we do have stacked positive EMAs, which is a bullish. So, we kind of have a divergence there, going, kind of sending mixed signals. We are in a weekly squeeze. We have been for a few months now, and our RAF down here is, we are getting a buy signal on the long-term weekly chart. But the daily is kind of driving that. Also, we look at, let me minimize this chart here. So when I look at the shorter term, we've got the daily, then I'm looking at the 2-hour chart. We had the sell signal. We're getting exhaustion here, but we have a red ready. So potentially another, it may flatten out here before it goes lower. And we're showing here that the trend on our 30-minute chart is also down. So with that being said, it's kind of, and like I said, it's probably going to be pulling back. So so when we, whoops, wrong one. Get too many charts going here. So when we look at this, I'm expecting the Russell to pull back into this zone here. We'll see if it catches some support with the daily 50 or the 21. So let's go ahead, and we talked a little bit about the VIX, and so let's go ahead and jump into the S&Ps. The S&P, like I said, has set a new high. It is just, the markets are just pretty flat right now, I think. Neither really any conviction. I think the chop continues in this market, for the most part. But I think it's going to cool off. I think the market, the S&P and the Qs, I think they're going to kind of have a cooling off day, and may trade a little sideways to maybe a little bit to the downside. Whether or not, but again, we'll be watching this, and looking for opportunities in the S&P. The S&P has just been on fire, and this is such a bullish market, and not in any situation to start shorting this thing anytime soon. So as far as handling the motion, looking for shorter term plays, keeping my capital at a minimum as far as keeping most money in cash on the side, but playing to the strengths of credit spreads and certain plays that I like, income plays, and finding areas to where the stocks won't go. And so that's kind of what we're looking at for here. So, using multiple time frames to determine, entry points and playing things from a shorter time frame instead of holding for, days to weeks. We're holding for a day to maybe just less than a week, and making smaller returns and getting in and out of our, which increases our probabilities, doesn't necessarily increase our returns, but it allows us maybe to play. We play fewer stocks during that period of time, and that works out for us. So let's jump into the Qs here, and the Qs is real similar. They've set a high today. The Qs right now are kind of trying to push up, and again, I don't know what's going to stop this market, but it's just been kind of again, very, very bullish, looking for anything that might indicate a pullback. We are hitting up against the 3 ATR on the daily chart. Anytime we get to 3 ATR, it's way overextended, and from the mean, which is right here, it's 21, and the markets are going to, it's going to want to return to the mean. Whether or not it's going to do that here today, but what we've seen is when this market makes the decision to pull back, it's not just a little pullback. I mean, it's usually pretty sizable pullback, as far as maybe a 1 to 2%, and we might see a 1 to 2 days of that, and then it comes back with vengeance, and we'll see if this trend continues into September. By all means, right now, I think it's going to. And if the government continues wanting to throw some stimulus at this market, then this market it doesn't show any signs of letting up. Let's talk a little bit about the thanks to Apple. Apple actually closed, had a big day yesterday. We had been playing Apple here for the past few weeks, and we were looking for the break of 150 and for the close above 150. We got that today or yesterday, so we got a nice buy signal here on the weekly chart. We are approaching that ATR level. I don't know if I would be a buyer here. It looks to be, based on price, we are seeing a little bit of a pullback on Apple right now. We were in a daily squeeze. It fired yesterday. So I would suspect that Apple is going to continue. If it has the momentum, if the momentum continues, then Apple's going to push to a new high. And, so I would be looking for new highs, 155 would be a key level, all the way up to 160. So I would be looking for whether or not we see those this week or not, but that would be my next price target that I'm looking at here, based on what I see here. We have Tesla, and I have a position on Tesla. Tesla is doing exactly what we expected to do. It broke out, came back, pulled back, found support here on the daily 50, and broke here, hit a 1 ATR, consolidated, beautiful bull flag here, and it broke the resistance here, and it basically bumped right into about 731, and the high on this candle, which was 729.90, so we'll call it 730. So it hit 730, closed just above that. We'll see if it can get some follow through. Also, was in a daily squeeze. It fired. A few weeks ago, we were in a weekly squeeze. It also fired. So, but we are getting an exhaustion signal here on the weekly chart, where we could be running into some exhaustion here at some point in time. So I don't think the rally on Tesla is over. I think it will continue, possibly to about 750 before we see see a pullback, but we sold the 660 strike, so I'm not too concerned about that. So we're sitting really well on this. Even if we see a pullback, I don't think we'll see one back down to this level here. If we do, I mean, I'm not saying we can't get there, because there's 3 days, a week or two ago, that we got that sizable pullback. But we'll see if it happens again. But we'll be keeping an eye on that. Then of course, we have Amazon, which we have a position on Amazon. Amazon looked really great yesterday. It broke the 21 on Friday, closed above the 21. I was looking at it to close above the daily 50. We got the close on the daily 50. This is happening a little faster than what I anticipated, but that's all well and good here. So we broke, and we are starting to fill this gap. So I believe the Amazon is on a mission we've got, increasing momentum. We have a ready signal on the weekly chart for a buy. So it is setting up. So the downtrend is reaching exhaustion. So we may see a little bit of a rest here after yesterday, but I believe it will continue on its trend to its high. And we're targeting 3,500. And then, so basically this move right here up into this area here. So the 3,500 price target. And then once we close above the 3,500, then I believe it will have its sights set on the high of 3,773. So that's what we're looking at there. We did add a position yesterday. And let me see, don't have it there. So let me, we added a position on Home Depot. So we put a debit spread on Home Depot. We were getting a daily buy signal here. And then on the daily chart, and Home Depot right now is holding that 327 mark, but it closed above the 21. We had a nice move here. We're looking to duplicate this move here, and just basically a 2 ATR move is what we'd like to see. But Home Depot is what I consider my hurricane play. With Hurricane Ida, Generac generators and hardware, wood hardware, things like that, is something that I would suspect that they will benefit from. Also, there is another hurricane. I mean, we're right in the middle of hurricane season, so this is not going to stop here. So I think we'll see some more storms. We'll see some more damage, of which Home Depot will be on that side of the fence where they're going to be picking that up. So we picked this up. We got a short-term play here. We looked at about 18 days, I think. So we picked up the September 17th expiration. So we'll be in this for 3 to 5 days. If we don't really see the move here, or we get a close or two closes below the 21, we will be out of this trade, and we'll take our loss and run and redeploy the capital someplace else. So this is just this is not necessarily a high probability trade based on our daily chart, daily ready, aim, fire. Here we are looking for this to play to the upside, but we've kind of got a flat weekly showing a slight downtrend here, and we are in a weekly squeeze, and but kind of neutral here as far as direction at this point in time, which way it may go. So that's what we're looking at here today on this turnaround Tuesday. I hope that I'm going to call this. I hope it's not a turnaround to the downside, but it looks like the markets could be struggling a little bit here this morning at the open, and so we'll see what happens when the cash session opens at 9:30. So with that being said, happy trading today, guys. Click that like button and comment. Let us know how we're doing, and whether or not you like our analysis or not. And with that being said,